Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn Associates with your financial market wrap-up, and I'm able to do this a little early today. It's about 3:15 p.m. Central Standard Time. This will be where the settlement prices are in the stock indices. Remember, they stop trading at 3:15. That'll be the settlement until 3:30. Then they'll reopen until 4, then shut down. Then a new session opens 5 p.m. That's how it works. But you now have all of the stock indices develop in one day an embedded reading. It's rare that you see that. I don't recall the last time I saw all the stock indices develop a bullish or a bearish embedded reading in the same day. So that's good in itself. Today the Brexit vote took place and Miss May got her butt whipped. Now the question is, what happened? She lost by 230 votes. More than big. So that it's a huge defeat. Now the question is hard Brexit, which means the EU just leaves. Nobody seems to want to do that. They keep talking they're going to go back to the European Union and get a better deal. It's not going to happen. The last thing that could happen, an extension, they could try things, okay, or another referendum vote, and maybe they decide, you know, it's actually cheaper, better for us to stay inside of the EU. We'll know tomorrow. There is now tomorrow going to be a motion for no confidence against the government, not the Prime Minister. Now, this is a little different, and we'll see how that all goes, okay? But the interesting thing was the British pound did not lose value today. I think the worst is built in, then, to the market. When we're taking a look at the S&P 500 index, it's up 9.5 points for the week. So the market is still getting that bounce. You can see how that's moving along right here. You still have the trade of higher lows, higher highs. It began back here. It's continued. I define that as an uptrend. Now, yesterday's low becomes important only in the sense of the higher lows, higher highs. Why? I'll get to that in a minute. The market is staying over the 18-day moving average of closes in red. That gives the market upside bias. A potential resistance point is 2745. I almost said a Dow number, 2745. But I look to see where the Bollinger Band is whenever that's that far away. And that's much closer. So the near-term resistance, as I'll define it, is the 2651.25 level. I don't want to see 2567 taken out. And more important to me, breaks, even including taking that number out, until the red line closes back under 80. I say this market now gets well supported on each break. Lose that number, I'll change my opinion. It's the identical thing going on in the NASDAQ. You now have the embedded reading, the red and the blue staying over the 80 several days or more. You've got the higher lows, higher highs. Now the resistance around the 6792 level. Support the 18-day average of closes. The Dow support the 18-day average, even if you take out the last break low, because you embedded. That takes the rule of the day. Resistance all the way up here at 24,457. In the Russell, you've had the higher lows, higher highs at work. You now embedded until you lose that, which would bring back potential support here at the 18-day average into play. The market can keep going. Resistance around the 1487 level, the upper Bollinger Band. In the VIX, you're down to support at the 100-day average. Been there 3 days in a row now. You've had the embedded reading. So if the market's going to continue down, you put into play wherever that lower Bollinger Band is. One of the things that I pointed out on my morning subscriber video, and I can't do it here, but if you go back on the chart, you're nearing the top of the trading range of 2018. So you're getting into a support level of the top part of the VIX. If you throw out those couple of days where you got blow-ups in the market, you know, just look at what the basic top and bottom of that range is. In the bond market, you're trendless against the 18-day average of closes. I define it as a higher high, lower low, oversold, sort of stuck right here now for about a week of trading. When we step into the 10-year notes, you have flat momentum. If momentum leads price, the market's having trouble to the upside. The trend is up. Higher lows, higher highs. You'd break the trend if you took out 121.19.5, but you would not start a downtrend because you'd end up with a higher high, lower low. Therefore, the onus is on the bulls in support in the 121.24 zone, and they don't want to see 121.19.5 taken out. Otherwise, this chart can start breaking. It can just hang around the 18-day average. It loses whatever momentum it had. You're very oversold in TLT. So when you look at this ETF, you're into oversold area. You've come down sharply. You've been in a downtrend. You would lose the downtrend on a move back over 121.27. If the market can keep the momentum down here, you put into play the lower Bollinger Band support of 119.43. In the dollar index, the market has been trying to get an uptrend going. It's been fighting at the 100-day average to keep the downtrend in play because it had a downtrend. Lower highs, lower lows, but you have big divergence. Where's the divergence on the chart? Take a look at momentum. It's trying to turn up. And with that today it did, and often, as you hear me say, when a market's at a lower band or an upper band, it often goes back to that 18-day average of closes first to try to figure out what to do, and that's what I see there. Take a look at the euro, the opposite, but the euro sliced through that 18-day average today pretty hard. That means it's in a downtrend in the near term. You've got lower highs, lower lows, momentum down, bias down. I'll be surprised to not see the bears trying to support their position right here by resistance at the 115.03 area. And today's high will be the key, getting back over 115.50. Take that out, and then I think you lay up a bear trap because you have an outside day down. I'm not saying it'll happen. That could be the setup. Right now, I think the bears grabbed control of this market. In the British pound, let's take off today's action. Let's look at where you went. And I think I said this yesterday. You got up through the Bollinger Band to the 100-day average and you ran into trouble. As I just said, if a market retraces, often, in the end, it might go back to that 18-day average to regroup. It all happened at one spot. I didn't expect that, and yet it came back from there strong as can be. As I said, it's going to be too hard to trade the British pound till we know more of what's going on, and the chart action is saying that. In the Japanese yen, since this pattern right here, I have had a bearish bent on the market. I think it exploded with that flash crash we had to the upside. I still will not be surprised to see price in the 18-day average try to do more to come together. This market didn't even get a good bid off of Brexit in any manner. That was interesting to me. In Bitcoin, we had talked yesterday, you got to your lower Bollinger Band. That's where I think the pros in an oversold condition, probably taking some money off the table. A little bit of an attempt at a bounce today. I see resistance back at the 18-day average of closes, but this market has caught sideways action, and when it breaks out of here, it could be a very interesting move. Could have some power to it. In the Brent versus WTI, we're still seeing that the spread is trading under the 18-day average of closes. The market ran into resistance at the upper Bollinger Band last Friday. It has been backing off since then. In terms of condition, I don't have the settlement up yet, but the market's just an overbought condition. It's not trying to embed just yet. I've got pretty much the same, I think the same situation going forward here. Yeah, I can see right there with that number at 79. You don't have enough days in a row. If you break down, you tell me what you think might be the logical spot the market tries to grab some traction. I'm going to guess the 18-day average. If it goes up, the Bollinger Band is the resistance. I'm going to say the same on the Brent, resistance, support back here. In the gasoline market, we've had a pattern of higher lows, higher highs, and you hit the upside target of the upper Bollinger Band. Now, when I say target, that doesn't mean a market can't break out of it, but more times than not, you're going to stay within those bands. What makes it break out is when the bands get real narrow. You're not there yet, but they are narrowing, so present tense there. Overbought, higher lows, higher highs. If you break down, support back at the 18-day average of closes. And in the nat gas, you got up yesterday to the 100-day average, and that's still proven to be the resistance. If you pull back, look for support at the 18-day. If you take off to the upside, resistance at the upper Bollinger Band. The bulls have control of this market at this point, and that's how I'd view it. You know, we've got our new futures trading kit, and so much of what we teach is in here, and that's what these videos are about. My morning videos are very different. If you're a real trader, at 8:30 in the morning, I review 40 different charts. I'm not in the video. I record my screen, I talk over, and I'll throw out day trade ideas at you, position trade ideas, and the beauty of that is I wait for 8:30 to do it because then all the futures markets are open, be it the meat markets if you want those, and I cover all the different sectors. We talk about this in our futures kit. We teach chart patterns so you can work with them. It is not a charting course. It's a great refresher. And it covers, be it the options on futures, the futures themselves, quizzes. I teach M1, M2, M3, cause and effect, and what each of those mean is the numbers go up or down from the Fed. We teach pivot point series, which I think is really important because intraday these numbers seem to come in and give you support and resistance zones. I teach the Arun indicator in this. You're going to see these are the quizzes from the CME group and different brochures, and they teach you how to work with it. So a whole real kit. How do you get it? It's free. That's the best part, obviously, and I think it's complete. Give us a call. You can go to our website, www.iraepstein.com. You can click up here. It'll take you there as well. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.